Yeah, entries will be 9:30 to 11, and then if we do want to hold it, right, we'll hold it to either end of day or potentially swing it overnight.
I like it. So because there is this disproportionate, it's not a linear growth. Your profit doesn't grow linearly. There's other things that are influencing it. Does that mean it makes sense, or do you guys modify risk?
So I've seen your approach to this where you say you risk 1%, I believe, right?
I'm within 0.25 to 1% based on the setup type, but it's standardized, and my setup criteria is modeled, so I know what I should risk on that setup. Whereas I've also had credible guests that tell me, and their reasoning of like, you got to double down on A+ setups and scale risk. Other people just with prop firms, they go more aggressive on the challenges, and there's a spectrum of opinions, which is why, and I think everyone has the right to have that opinion. I don't think there's a right or wrong way to do it. But with this, there's another element into the mix. You have more things to consider than in Forex.
Yeah. So for me, I actually saw the video of you and Umar, like you guys had that risk management talk, and I'm gonna have to go more with Umar's side on that one. And the reason that is because with options and the strategy that I trade, right, I need to have a trending stock on the higher time frame, right? And like I explained, right, I'm looking at the 4-hour daily to make my thesis. So I need to have a trending stock. So that could be Nvidia, Tesla. Recently, it's been Nvidia, for example, right? And so if I have a trending stock on the higher time frame, then if I go down to the lower time frame, then I can actually have my risk on during that time. I should have more size in that trade. For example, yesterday I did a live broker login for I think $22,000 yesterday. The reason I was able to do that was because Nvidia had a very clear downside move yesterday, and therefore I sized up yesterday. I had about 60 contracts. Where 60 contracts yesterday was like $100,000 position, right?
Of risk.
No, $100,000 position, total position. The risk was was like $10,000, but the position size was 100,000 because it was a 2-hour multiple.
Got it.
Right?
Okay.
But usually, for example, like on Tesla, or if I'm trading any other stock, I'll have like a $15,000, $20,000 position size.
Do you have leverage in options?
What do you mean?
Like if I put 100,000 in trading, the buying power can be 1 to 100. So I could have a lot more buying power. I could buy more of contracts. But in options, are 1 to 1.
Well, options is already leverage in itself. Right? It's already times. When you buy one options contracts, it's technically you're buying 100 shares. So it's already options in itself. When you buy the contracts, it's already highly leveraged.
Okay, so it's not like a crypto thing where if it goes to zero, you lost everything.
You technically, if the option contract goes to zero, you'll lose everything.
Okay. So
yes.
Why have you guys chosen options?
The thing is I feel like now a lot of traders come in, they're on the ICT, SMC. That's like the new wave I'm seeing. Because I started my own social media probably like 2 years ago. But I've been on social media, obviously just being younger. I've been on social media the whole time. I've been watching a lot of traders and stuff like that. And so I think the ICT SMC thing just came in, like the last 2 years has really been like boomed, right? But before then, I started off on Twitter. And on Twitter, I started off penny stocks. Right, so if you know what penny stocks are, right?
Wolf of Wall Street.
Wolf of Wall Street, right?
I don't have too much knowledge, but that's all I know.
So those are probably the worst things to trade, right? So that's what I started on, and so I was trading that, and it was like, okay, like I'm trading this, like the reward is definitely there, but the risk on penny stocks is like these things will, if they halt, right? If the stock halts on you, this thing will open up down 60-70%. And you lost that money in like 1 to 5 minutes, right, on penny stocks. And so I was like, that's not like, I can't have a good risk management strategy when this thing will be down 60% in 1 minute, right? But with options, you're trading large caps at the end of the day. You're trading Tesla, you're trading Apple, you're trading the biggest companies in the world. So if you're trading those with option contracts, it's a little bit more safer than trading those penny stocks, right? Because penny stocks, they'll halt down. These things won't halt down on you unless they have a catalyst, right?
And they're more manipulated. The penny stocks.
Penny stocks, 100%.
A big whale can really influence it.
100%.
How manipulated? Because in Forex, no one can really manipulate it properly because it's such a liquid asset and there's so many participants. The reason I like it is because not everyone involved in Forex is there to make profit. If there's a big oil trade going on and it's happening in dollars, that's going to be a physical movement in price because someone's buying that. But in options, it's a manufactured asset class, right? And therefore, everyone trading it is there to make money. So it's a very player versus player orientated.
Yeah.
Okay, so what was your decision-making process to choose that over Forex, or something else? It seems like there's more challenges to it.
Thing is, a lot of people, they like Forex and futures now is because there's prop firms, right? The main thing is capital, right? It's usually a capital issue, and with the prop firms, right, it's like where you can have $100,000 account, $50K account for what, $50? Like that's what the appeal is, right?
You don't have that.
No, because when you're trading,
we don't have prop firms in options. You don't have.
Okay, so. I'm not in your guys' space, so I'm maybe coming across more of a novice, but maybe a lot of traders too. in the audience, but I'm seeing like it's harder. It seems harder. There's more variables, and it's more confusing, and it's a capital issue, and you can also lose all your money that you put in. Like a lot more hurdles that are not necessarily need to be there, but obviously you guys have chosen it because there's other benefits. What are those benefits?
So the thing with options is you for example, like back in the day when like the market right after COVID, right? Like did you see like those Wall Street bets type of like, right? You saw that, right?
Yeah.
They were all trading options. Right, they were all trading options.
Yeah.
Every single trade that you saw that was a big trade there was an options trade. So the reward, if you can, if you have a really good trade, for example, like if Nvidia drops that day, let's say 10-15% on the underlying, these contracts will go up 1,000%, 2,000% within a day. Right.
So why do you cap it at 1 to 2?
That's just because I don't cap it at 1 to 2. I'll let
your first position.
The first partial will be around there, or the first partial will be at high of day, but then I don't cap it. That's the thing. I can let it run to my higher time frame targets, and then once I am at those higher time frame targets, as mechanical as you want to make trading, the only discretion that my strategy I feel like has is just if I'm looking at the markets and Nvidia has, let's say, a news catalyst, and I know, well, it's once again I wouldn't know, but there's more of a likely chance that this thing's going to keep dropping. I will stay in only like 2 to 3 option contracts. Very, very small, right? And those contracts, if I swing them overnight, can make 2,000, 3,000%.
Oh, that's crazy.
Exactly, right? So that's the main reason we chose options is because if you can manage your risk properly, and options is a class or asset class that you really need to manage that risk. If you can manage your risk properly in options, you can probably make the most amount of money. But the thing with options, once at the end of the day, is you don't need a big account. Like, you know how for your guys' thing, like prop firms, especially like stuff like that, you need like $1 million